to introduce titled GenAI Green Tech, Catalysing Enabling Transition Strategies, that will discuss and explore how innovation, technology and finance are driving significant advancements across all industries for this transformation. Again, please submit your questions for our panelists via Slido. In-person attendees, please scan the QR code on the screen or on the back of your badge. And online participants will find it under the Q&A tab. And so I'd like to have a warm welcome to Ben McQuay, moderator for this panel, Vice President at the Hong Kong Green Finance Association, also founder for Ben McQuay & Co. And also to the stage, Ms. Elsa Pao, Group CEO of Blue Onion. Joining us virtually, we have Dr. Chu Kang, Ms. Seren Yip, ESG Director, Alibaba Group, Dr. Chu Kang, Vice President, HKGFA, Managing Director, Sustainability Strategy, Bank of China, Hong Kong. And last but not least, Mr. Yusi Ahonen, who's Head of ADB Ventures, Asian Development Bank. So without much further ado, the floor is yours.
Thank you very much, and welcome to the highlight of your Hong Kong Green Week, which I can say with a high degree of confidence. Why? Because we're going to be talking about everyone's favorite subject, AI and tech, and specifically how tech is catalyzing the transition. Okay, so as always with Green Finance Association Annual Forums, we have a wonderful panel of experts, and importantly for this conversation, we have in Bank of China, Hong Kong, and Asian Development Bank, we have representatives of money. We have in Alibaba, we have, of course, a major global tech corporate. And in Blue Onion, we have a pioneer in tech solutions for climate risk management and investor strategies. And so because we don't live in a perfect world, as we all know, too well, we also need to look at the sort of the climate impact of the surge in the use and adoption of AI and tech more generally, and how all of the above is affecting transition strategies. Before we sort of turn the mic over to our panelists, let me just reiterate Jenny's comment. Please send through your questions, which come up on the screen here. So without further ado, let's bring in Seren of Alibaba. Seren, you're very welcome, and thank you for joining us this afternoon. How is GenAI helping Alibaba decarbonize?
Hi, Ben. Good afternoon, fellow panelists and all the audience. So thanks for the question. AI is definitely one of my favorite topics these days. So Alibaba and AI, first of all, let me introduce the relationship, right? As first, Alibaba is a mission-driven company. And since our incorporation in 1999, we have adhered to our mission to make it easy to do business anywhere. But how does AI come in? In this digital era, we are staying true to our mission by helping our customers and business partners harness the power of digital technology, especially with the help of AI and cloud infrastructure, to optimize operation and unlock new opportunities and drive innovation. So in fact, AI-driven is our core strategy now, and this reflects our view of AI as both a core driver of our business growth and a transformative force for the future. So I would say before I start talking about how GenAI is helping our decarbonization journey, maybe let me first introduce our carbon neutrality goals with you all first. So first, as for Scope 1 and 2, Alibaba will achieve carbon neutrality in our own operations by 2030. And for Scope 3, Alibaba will collaborate with our upstream and downstream partners to achieve a 50% reduction in the net emission intensity by 2030 as compared to the base year 2020. And in particular, Alibaba Cloud will achieve carbon neutrality for Scope 3 first during the same period. And in terms of for the case study, I think you may be interested to hear two of our business cases. First of all is Alibaba Cloud. So for Alibaba Cloud, self-built data centers, actually, they are the main contributor of Alibaba's Scope 1 and 2 emission. So in order to enhance the energy efficiency of computing infrastructure, Alibaba Cloud leverages AI to reduce energy consumption and carbon emission per unit of computing power. So we use the AI-powered intelligent time scheduling of typical computing tasks, such as like running workloads during periods of lower electricity costs or cleaner energy supply that can reduce energy consumption and lower carbon emission. And the second one, I think we all love shopping. And then I think for Double 11, for example, we always see a lot of like boxes and a lot of transportation go around now. So China is our logistic arm, and it is the major contributor of Alibaba's Scope 3 emission. So China continuously enhances its end-to-end green logistics system by integrating digital technology. So two of the AI applications, first is optimizing box packing algorithms. So some of you may still think that maybe for packaging, it's just for a worker, put everything in a box whenever it's convenient. But actually now, China developed AI-driven box packing algorithm to improve the warehouse efficiency. So this algorithm can recommend optimal box type, size, and layout based on the specific items and shipping requirements. And the next one is air load efficiency optimization. So China has developed an intelligent build-up algorithm that can optimize air load efficiency. So unlike the traditional method that relies on human experience, now this algorithm can comprehensively calculate the weight, volumes of cargo to quickly generate like 3D loading diagram. So this approach can maximize the use of limited cargo space and enhance the air freight efficiency. So Ben, I would say, looking ahead, we believe AI will be a powerful tool to improve the effectiveness of decarbonization.
Thank you, thank you. And how do you balance the need to integrate AI, as you've described, into your processes with the commitments that you've made as a corporation to decarbonize?
It is actually a very challenging task, I would say, at the moment. So, but what we have bear in mind is when we form our business strategy or decarbonization, we have three strategies in mind. First of all is integrating sustainability into our business development. Second, as a tech company, we really hope that we can harnessing the power of technological innovations, including like emerging technologies, AI. But the last one is, as a platform company, we think it's very important to actually build a stakeholder ecosystem. Just like today, we have investor bankers here, how we can work together to actually achieve decarbonization goal together during this, I think, rapid growth of AI technology.
Okay, great, thank you. Let's pause there and bring Yusi into the conversation. So Yusi, we've heard a really great explanation from Serena around how Alibaba is using tech in its transition and handling some of the environmental impacts of that. What can you tell us about the Asian Development Bank's investment strategy when investing in green tech? And if you can, what are you investing in, and what cool, innovative things are you seeing out there?
No, thanks for that. And I think if we take a step back and think the market right now, I think we are living defining moments. Green technologies. We are facing all the global uncertainty on the policies, but then on the other hand, we understand that the demand for these technologies is not going to be, in fact. So at the Asian Development Bank, we do feel that there is a growing need for investments in this sector, and patient long-term capital is much needed. But we see here that when looking green technologies, what changed and what kind of guides our way how we look new investment, that green tech needs to make strong business sense these days. There was maybe a time when you could raise money on the back of carbon emissions, but those days are gone, especially in the emerging markets. So we are looking solutions that will actually reduce costs, improve efficiencies, but at the same time they need to cut emissions. So that is the way how companies can find capital. And I'm happy to say that we just raised our second fund earlier this year, investing 100% in climate in Southeast Asia. And we are looking at these corporates that can use AI to make their climate solutions more efficient. We need to remember that climate is still a mostly hardware game. If we are looking EV fleets, that's hardware, or whether we are looking battery technologies, but how you can use AI is to make these development cycles much more efficient. You can optimize, for example, logistics routes, or you can optimize how you build some of the hardware. So it's really the intersection we are looking at AI solutions at the climate tech space.
Great, thank you. Elsa.
Yes, sir.
You get a special call out for keeping me company on stage.
Yes.
So thank you very much. Thank you very much.
I came all the way from Tongcheng, by the way.
You canoed. Okay. Elsa, how do green software solutions help to catalyze the sustainability transition?
At the end of the day, I think it's all about capital, right? Channeling the capital to the right places. But when we talk about risk and opportunities, let's talk about risks first, right? So we see that there are two sectors that are mainly driving or mobilizing the capital. One is through lending, one is through investing, right? So when you involve the banks and the asset managers, the first thing we really need to understand is their underlying OpEx and asset liabilities that they would encounter for financing these emissions. So whether they are a business loan or they are a project finance, a power plant, or a commercial real estate, the underlying risks that they are taking on and the emissions that they're financing, really it's an important thing for them to understand. So for the banks, you don't want to take on too much emissions into your loan book, onto your balance sheets, thereby affecting your own decarbonization journey. So the banks pledge for a net zero, and then with all the loans that are not very clean, it would drag their feet on their net zero journeys. And for the asset managers is running into a greenwashing risk, right? So you are on one hand saying that you are supporting these companies that are in transition, but on the other hand, you have no way of tracking where the CapEx or whether or not there's sufficient CapEx, eligible CapEx going into the projects or the decarbonization journey. So it's preferably that the financiers would be able to track these carbon emissions from day one, from all the way from the supply chain onward. But quoting one of my friends who said, the supply chain, ESG doesn't really mean ESG to them, environmental, social, and governance, but they actually means for earnings, survival, and growth. So they really don't have the time to entertain so many questions on a questionnaire, uploading, downloading all the bills, etc. So by the end of the day, tracking the actual emissions is quite critical as well. So that's where the risks come from. But there are, of course, opportunities. So once you know your borrowers or the investees in your portfolios that they are way above peers on their carbon emissions, and especially in those hard to abate sectors, with data and technology, you'll be able to work out a plan for the decarbonization pathways. But at the end of the day, you really need to understand what sort of emissions are you decarbonizing, right? So the factors are very different. But having the data and the technology to calculate the number of CapEx, thereby offering an investment to the company or investment or a loan to the company to say, changing a fleet of 20 diesel trucks. Right, so those are the opportunities that are available, but only capable technology and data would help drive that. And of course, there's AI in the process.
Sure. Thank you. Let's pause there and bring in Dr. Chu. Dr. Chu, we've heard from Elsa the importance of data collection and sort of reliable data. Tell us, how does good ESG data management help your clients unlock capital to support their transition?
Thanks, Ben. I have to maybe say something about Bank of China. We are deeply committed to the sustainability development, not just a corporate goal, but as a responsibility to our clients and the planet. So we're leveraging cutting-edge green technology to decarbonize our operation and empower our clients. Back to your question about ESG data, it's quite something like a game changer. By providing accurate, transparent data on their environmental performance, we can help clients assess green loans, sustainability-linked bonds, and other financial instruments tailored to their transition goals. For example, our carbon tracking platform gives clients the data they need to qualify for green financing, which often comes with a better term. It's not just about compliance. It's about turning sustainability into a competitive advantage, unlocking capital for projects such as renewable energy projects, energy efficient upgrades, and more.
Thank you. Sorry, Jenny, is it possible to turn the volume up, or it's very difficult to hear our online speakers? Thank you, Dr. Chu. Just as a follow-up question, and apologies if you touched on this, but we're having a bit of audio challenges. How much of a difference does it make? I mean, for your clients. I mean, what I mean to say is, how much of a difference does it make to their access to capital by reference to the quality of the ESG or climate data that they have?
Yeah, this is, I think it's quite significant, because it's not something, as my panelists saying, they need to fill in all the forms to answer a full questionnaire sort of things. We've got a sort of a score already for their carbon performance. So it becomes much easier for them, and especially for SMEs, we've got a quite standard, platform for them to get access to funding or finance they need. And also we use something else like blockchain, this kind of technology, to sort out. My panelists talk about greenwashing risks in terms of how we collect data, how we make sure our project is for green purpose. We've been a pioneer in digital green bond issuance. We're serving as a joint global coordinator and lead manager, book winner for Hong Kong government's first digital green bonds issuance in 2023 and 2024. Unlike traditional bonds, it rely on fragmented systems and could take up to 5 working days to settle. The digital green bond use DLT technology to streamline the process. It cuts settlement time significantly, boosts the data security through blockchain. Looking ahead, I think blockchain opens very exciting possibilities. Real-time tracking of bond proceeds let investors know how exactly their funds support green projects, fostering trust and accountability. And also to tokenize, more specifically, tokenized bond can allow retail investors to participate in markets once served for large institutions only. So we can imagine a future where a small business owner in Hong Kong can invest in green infrastructure along with global institutions.
Great.
That's the power of technology.
Great, thank you, thank you. Let's just take a question from the audience. I'm going to read it first, and then we can decide who is best placed to respond. So the question is this: are there sufficient grants to encourage innovation in this space, and is current government support enough to accelerate it? As you're closest to me, I'm going to ask you, what do you think?
I'm probably the closest as well, because I also am a beneficiary of a few of these grants. Despite the dollar amount, I think it is still a very good gesture coming from the Hong Kong government in motivating green technology. So last year, 2 years ago, was the FSTB's initiative to drive some of these green tech schemes, which allows solution providers like us to connect with the banks and also the licensed asset managers, as well as insurers, to develop solutions that are very well fit to what the regulations is demanding. And this year we're under the Hong Kong MA's FinTech Supervisory Sandbox to actually promote due diligence, sustainable due diligence on investment products. So this whole journey is quite important to allow the retail public to have a hand on it as well. Yeah, so it's getting there.
And how does that support help companies like yours and others that are developing solutions in this space actually sort of come to market? Because there's probably lots of ideas being incubated, but how do we is there enough help to support the actual sort of go-to-market strategy?
Well, I think the biggest difficulties nowadays is this space has many different solution providers that are very fragmented. They provide silo solutions, and this is also an extremely difficult process for a financial institution to integrate. So if you get fragmented solutions coming here and there, it's very difficult for them to spend 1 year onboarding one solution provider and another year to, so it's very difficult. So what we do is we've actually integrated multiple modules on our side, and then we are creating one solution that's integrated to the bank, which is much easier. So I think what's needed is for the space to come together a little bit more, have more exchanges, and for those catalysts like Cyberport or some of those quasi-government agencies to come together and understand the solution providers that are operating in silo and see how they can bring everything together.
Okay, great. Well, let's switch gears slightly and bring Serene back into the conversation. Serene, you're sort of flying the flag for corporates in this conversation. What financial and strategic support do you look for from your investors and your banks to support Alibaba's climate transition journey?
Actually, I think we need a lot of support of different aspects. So I think first of all is definitely capital. So I think sustainable finance is one of the very important part. So back in 2021, we issued a US $1 billion sustainability bond. It was our very first one. So we used the proceeds to invest in projects like to enhance our energy efficiency, green buildings, and renewable energy. So we think the market received it well, and that's also enhanced quite a lot of internal awareness about what project actually we can work with the group level and business level, and then try to get capital. So and the other one is I think loans as well. As I mentioned by Elsa earlier, I think loan is also a very important part for company. So we obtained a green building loan in China, which was primarily used for our construction project for our campus in Hangzhou. So the campus was designed to meet gold standards. So we welcome you to our new campus to have a look, because I would say it's very beautiful and with a lot of sustainable elements. So I think for sustainable finance in general, it would be great if bank can provide more tailor-made, I would say, sustainable financing options for company like us, is maybe for specific business group and also group level that is maybe can work with our KPI. So we are always interested in staying informed of any innovative green finance solution emerging in the market, which is can provide capital at lower cost and widen our investor and lender base. But on top of money, I think one thing very important is actually knowledge sharing. Because I think for company like us, we have a lot of employees, but most of us, we don't know much about capital market or climate transitions. So we have to better equip ourselves to cope with the climate transition challenge. So we believe engaging with banks and investors, I would say in particular maybe the ESG team or their advisory team, actually lets us understand a lot more about the leading practice in climate transition or resilience strategies, as well as the latest financing framework in the market. So I've already invited quite a number of the participants today to be our speakers and our various ESG webinars or small group teaching. I think it's very helpful because we need help from the leader. And that's provide a lot of insight for us for planning, operation, as well as reporting. So I think on top of knowledge in general, another thing is the technology and solutions. Because we know that for banks and investors, you have your own climate transition solutions, and also for your investee, or maybe even for your client, they also offer quite a number of different services and products that may be helpful to us. So we are interested in knowing more innovative and advanced climate transition technology and solutions from financial institutes as well.
Okay.
Thanks, Ben.
Well, we have two financial institutions with us. So, I mean, can I just invite UC, if you have any comments that you want to share just in response to Serene's remarks?
I think, thanks, and I think it resonates, and I can, like the general comment is that actually we see increased activity and welcome increased activity by corporates as investors, and we do work alongside with many CVCs in these markets as corporates do see the strategic value in investing in the technologies. But I think in general, as we are looking to climate, I think it's important that everyone is aligned, that we are solving the same problem, and as investors, of course, we want to make returns, and for corporate that return might be slightly different. But yeah, very much look forward to increased cooperation with the large corporates, because they are all needed in this space.
Great. Dr. Chu?
Okay, thanks, Ben. Literally, I think Bank of China Hong Kong has already got a very strong partnership or relationship with Alibaba from co-manager. We were the co-manager of your 2021 sustainability bond issuance, and also we benefit from your technology streamline our SME loan approval via Alibaba Hong Kong's digital wallet data in 2023. So we are very interested to be part of your transition journey. In terms of the loan or the money, just talk about, I guess, for example, AI is a very hot topic. I guess for Alibaba, it's likely means expanding your data center. They are sort of energy-hungry data center. So banks like us very interesting to support this kind of activities. We can offer green or sustainability link loan to fund the energy sufficient data center, like those powered by renewable energy or the advanced cooling system. We've already supported this kind of initiative 4 years ago, and additionally, our sustainable finance advisory service can help or can talk to you guys to structure deals that align with Alibaba's ESG goal, ensure you access to the capital efficiently with meeting global sustainability standard and with a better term, you just mentioned. So this is point number one. And also, I would like to echo your things about education, because beyond financing, I think banks like us and tech firm like Alibaba can team up on the marketing and education. It's not only about your internal education. We have this kind of market position to do more market education and do ecosystem development. So the case, for example, we work together could be a role model or sample for the market practice. And also, and we are all at the same panel here today to raising awareness about sustainable finance among SMEs and all the uses. So yeah, I just like to echo two of your points. Thank you.
Great. And Elsa, so Serene mentioned the corporates need a lot of support, capital, innovative solutions, and knowledge sharing, which I think is very much your wheelhouse. So tell us, if you would, how do your products make it easier for corporates to access sustainable finance and for your clients to invest in the transition?
Okay. So at Blue Onion, we have solutions catering the entire financial ecosystem. But it's very important that we start from the bottom of the chain. So once you have the information, if the information is tainted, is not correct, it flows to the issuer, and then the issuer flows to the bank and to the asset managers. It's not going to be very accurate. So it's very important that we get the bottom right. So we start with a module called Carbon Manager, so that these facilities, the subsidiaries or the branches of the borrowers or the investees, would be able to provide the information, which we have 21,000 emission factors embedded into the system. So practically you type in the acres of land and the number of buffaloes you are raising, the amount of methane that they emit will already be calculated. So it's not necessarily an estimation, it's very much based on the different protocols from different jurisdictions and taxonomies. It's being calculated. So we start with that, and then we have a credible baseline. So once it gets to the banks, so for example, in the use case of a bank, they would be able to, the issuer would now be able to hand over a set of very credible data source. Probably at that time, it's still, if the company is too small, they don't have the data, we mapped to the proxy of our listed companies, and therefore the PCAF quality is still probably a little lower. But once the borrower started putting in new information and real information, the PCAF scores would get higher. So the bank would now be able to see the carbon emissions of each of their borrowers in a consolidated platform. So that way, they would see the ultimate bottom line of their own carbon intensity, the carbon footprint, and they would also be able to see every borrower's different loans. They may be taking out loans at different times, and how is their carbon emissions being calculated. Now, with that, it gives the banks the ability to use our other module, which is called a climate scenario analysis module, that we can calculate and look at the entire loan portfolios using the NGFS framework to look at how dangerous their loan book is, right? So if they're all situated in an extremely vulnerable area for sea level rises, or extreme heat wave, et cetera, thereby, and also locations where the assets will become extremely vulnerable. But you can also see the borrower's current situation where they are on a net zero pathway, or they're not doing anything. So if they're not doing anything, what would be the ultimate OpEx liabilities, including carbon taxes, rising electricity costs, et cetera, for this particular borrower? So with that information, because we already have the carbon emissions factors, underlying emission factors in the system, we're now able to use AI algorithms and physical and transition risk, depending on the situation. We calculate the CapEx that is needed to help this particular borrower to decarbonize. So it's actually a very comprehensive solution with the multiple modules that we add together. So it's a straight through process. So for the asset managers, it's the same. They put in the ISA number for their asset for each of their funds. We give them the underlying companies and every one of their material risks, the transition and the physical risk for each one of these companies in the 2030 to the 2050, and for physical, it's 2100. What the ultimate risks are for these companies. So extremely powerful. Yeah.
Fantastic. So moving on and just reflecting on the theme of this session, catalyzing transition strategies. Are we doing enough to embrace GenAI in catalyzing the transition? And this is just an open question to all of our speakers. And let's, Jussi, would you like to go first?
If we are looking still from especially emerging Asian context where we have mostly investing, I guess it's fair to say that we are in very, very early stage still, how we use that one. And I think one of the key questions to me is where large corporates might get the benefit of the AI, how we make sure that the SMEs, which are still the driving force in many of the developing countries in Asia, get access to these AI solutions so they can benefit from the improvement. So I think there's still a long way to go, but obviously opportunities the AI provides to climate tech companies, which are often providing local solutions, but that has to be scalable, are immense.
And providing sort of access to AI solutions to SMEs and emerging markets, is that something that ADB is sort of looking at, or that you and your team are looking at as you consider investment opportunities?
Yes, definitely so, because we see AI as a powerful force to improve efficiencies, making analytics more accurate, and that can help many climate solutions to scale. So obviously that is close to our DNA, and as an impact-driven investor, that is exactly what we are looking for.
Thank you. Dr. Chu, same question to you.
I think we are only scratching the surface of generative AI in climate transition. But realistically, for us, we've got 2 pain points stand out, or 2 things that may generative AI be helpful immediately. The first thing is Scope 3 emission calculation. Measuring financial emissions, Scope 3 is still very challenging for us. Clients often lack structured data, for banks like us to rely on a simple sector average. So generative AI can streamline data collection, clean massive data sets, and picture emission trends, making reporting and how we catch our clients' needs more accurate and actionable. And the second thing is about green finance or taxonomy or transition finance taxonomy classification. For us, we feel that classifying activities as green, sustainable, or transition finance is a little bit labor intensive or easily exposed to human error. I think generative AI can automate this kind of process using natural language processing to analyze projects data and provide a constant, unbiased classification. It could also suggest a tailored transition strategy, like recommending low carbon technology for a specific industry. Thank you.
Great, thank you. Serene, over to you. Are we doing enough?
I definitely echoed with our 2 fellow panelists. I think at the moment it's just too early to tell because AI is still developed very rapidly. And I would like to share some data. I would say is, as announced in our recent earnings, in fact, our revenue from cloud group can grow 26%. And for AI-related project revenue, achieving like triple-digit growth for the 8th consecutive quarter. So on business side, it's definitely amazing. So, but with AI development, there is an increasing demand for energy consumption. So from my recent engagement with investors, I would say, especially with ESG analysts, the top question is, are you still confident that your carbon neutrality goals can be met? So honestly, it is tough. But we are trying our very best to handle it, and I would say we are still on track. So I think it's definitely we have to use AI and other emerging technology, as I mentioned earlier, to try to embrace the change. So I think on Alibaba side is we definitely have to continue with our stakeholders to use technology to embrace the change and to develop systematic and scalable collaborative solutions to handle this.
Great, thank you. Elsa?
Sorry, what was the question?
So the question is, are we doing enough to embrace Gen AI in catalyzing the transition?
Oh, sorry, I still don't trust AI too much yet. It's great for research, it's great for data gathering, but you know, like with solid data, calculating backwards using AI to work on the algorithms is fine. But if you're looking at potential forecasting or potential implications in the space, I don't think it's there yet. Yeah. So let's not get that over our head, I think.
Okay, that's good, good. Words of caution. Very good. So let's turn to the questions that we have received. Let's see, a general question. Okay, so I'll ask the question and then I'll invite any of our speakers to raise their hands to tackle it. So from an AI adoption perspective, are you actually seeing tangible productivity, revenue generation, or cost efficiency benefits today? I mean, I'm going to hazard a guess based on the last set of remarks that probably not yet, too early to tell. Any additional comments on that one? If not, we'll move to the next question. Okay, timed out. Next question, are there any examples of using GenAI to combat greenwashing? Will AI washing become a concern? So I think, Dr. Tu, did you mention greenwashing? I think maybe Elsa, you mentioned it as well, but any AI solutions that anyone's seen to tackle greenwashing, which, as we know, remains alive and well in our financial center, and I'm sure everyone else's as well?
Yes, literally, we did have an internal discussion about this topic, how AI can help us in terms of managing the greenwashing risk. But from our understanding, AI at current stage, the natural language, big language model is more or less to sort of cannot sort this kind of question or issue directly. So we may see if the AI can have a more powerful functions later, but at the current stage, we understand that they can only help us to, in terms of, I say data collection and clean data, or these kind of things will be very helpful. But I haven't seen any immediate solution for the greenwashing risk management.
I think it's more useful, there are different use cases, but I think it's quite useful for smaller companies who, or smaller listed companies to do reporting, for example. Most of the time, they look at these questions, they look at these frameworks, and they don't know what to fill out. So for example, within our database, we have millions and millions of data. By putting an AI agent reading these data, we would be able to help the smaller companies to identify where they are and what they aspire to be, and therefore helping them with the reporting by using the GenAI to study where they belong and where they should be.
Very good. So just conscious of time and the need to wrap up. So we heard from Serene actually about, corporates do need support. They need capital, they need innovative solutions, they need knowledge sharing. Part of that sort of transition process, of course, necessarily involves the collection of, the efficient collection of reliable data. And it sounds like whilst AI is promising in terms of the solutions that it could deliver in the future, right now it's probably too early to tell, or at least we are still very much in a, we're scratching the surface, as Dr. Chu said, and at a very early stage of AI adoption.
We are still smarter than the AI in this space so far.
Absolutely. You heard it there. It's an exclusive, a GFA exclusive, live on stage. So let me, just before we sign off and thank our speakers for their participation, let's also give a shout out to Team GFA, who have shown extreme adaptability and resilience in managing the storm and laughing in the face of the typhoon to ensure that the show goes on. So really, really impressive to the team. So thank you, GFA. Thank you, Serene. Thank you, UC. Thank you, Dr. Chu. And always thank you, Elsa. Thank you all for staying with us. And over to Jenny.
Okay.